Other names, I mean, Palantir, you called the Messi of Lionel Messi of AI. You love Palantir. Do you still love it?
I mean, best pure play growth name and pure play AI name, I think, out there. And I think what Karp and the team have done is still so underappreciated. From a use case perspective, they are going to be front and center. I think this is one where Palantir in the next 2-3 years will be a household name. And I think they're just starting that journey. So it's a name. You'll have ebbs and flows in terms of quarters and overreactions, but this is ultimately a stock, $35 to $40 is, I think, where it's heading.
Well, you said that it was probably one of the most underestimated AI plays. When was it, that Palantir, what was the moment, the defining moment for you that you said, you know what, Palantir is not just Palantir or something good, it's something great? What was that moment?
It was about a year ago when I'm talking to all of our checks and all these Microsoft, Oracle, all these partners, Palantir kept coming up. Because I think everyone viewed it as just a government play, but essentially in the enterprise, especially with AIP, I think they really built the platform that's going to transform the company. And look, you could, and people will fret from a quarter to quarter in terms of what they're going to do. This is almost similar to when Jensen took NVIDIA from a gaming company into, of course, the godfather of AI and the gold standard to where we are today. I think that's what Karp's doing with Palantir. This is a massive transformation story in motion.
It was recently reported that Palantir won a $480 million contract from the US Department of Defense for a prototype known as the Maven Smart System, deepening the data analytics provider's relationship with the Pentagon. And this is a long contract. In fact, it's expected to reach its completion date in May 2029. It's important to watch how Palantir's AI and data systems will actually be used by the Department of Defense over the next 7 years. So, in today's video, we're going to talk about this deal and how it can affect Palantir stock. But before we do that, if you want to keep up with Palantir's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Buying opportunity. Let's hear what Ben has to say about the charts, please. Ben, good morning.
Nicole, good morning. It has been a bit of a challenge, as Joe pointed out, and we have been consolidating in shares of PLTR since that first quarter earnings result. I think that's a pretty good place to begin our look at price activity, the sell-off we saw in reaction to the news, the quarterly results, and then the sideways consolidation that's been playing out. You can see, again, for the most part, high conviction on the left side of the screen, sideways balance, which has formed since. So really no rejection of this lower level. I've got a 30-minute candle chart queued up here, and you can see that area that we're forming here is right around 2130. So well-defined upper, well-defined lower extreme to keep an eye on throughout the week to see if we break out of this range. But this is a bit of a bearish pattern. But as you take a step back, look at the longer-term chart, you're going to see a bit of a bullish pattern playing out, testing a lower extreme of the range that we're currently in. Again, this chart goes all the way back to, as Joe was pointing to, some of the price activity we saw to begin the year, the rally up 15, 16, all the way up to just shy of that 28, 29 level. And then, again, areas of value that are moving higher and higher. So currently in balance around 24. The bulls don't want to see us take out 17. That would kind of bring that working assumption that we're seeking value at higher and higher levels into question. What the bulls do want to see is a breakout up and through this $28, $29, $30 level, and then consolidation at a new upper level. So a continuation of this pattern. I wanted to show you where we are relative to the 50, the 200-day moving average, and how well you can see we're holding above both, right? Still kind of in a bit of a range, though, and retesting that gap that we saw that broke out through that $20 level. RSI not really providing a lean one way or the other, but yeah, in the longer term, I see a bit of a bullish pattern. Short term, not what the bulls are looking for, but I think it's tough to get too excited if you're bearish on this one right now.
Palantir's financial results, particularly in U.S. commercial revenue, rose 40% year-over-year and 14% quarter-over-quarter in Q1. Being an AI data analytics company, there's a strong demand for Palantir's offerings. For example, Automating tedious data analysis tasks could free up human analysts to focus on higher-level judgments and assessments. This could potentially improve military intelligence, which is why Palantir has so many deals with the US government, including its newest contract for the Maven prototype. Maven uses AI-generated algorithms and memory learning capabilities to scan and identify enemy systems. However, there are transparency concerns around what data sources Maven is drawing from and how targets are selected algorithmically, and this lack of exploitability could be problematic. Regardless, more government contracts means more government revenues for Palantir, and this could have a positive impact on Palantir stock. So, let's find out what it is. Hello everyone, and welcome back to Investor.
It's time for Under 30. Today we're discussing a crowd favorite in Palantir, a next-gen favorite in Palantir. Let's bring in our next guest, Jeff Pierce, Senior Manager, Derivatives Trading for Charles Schwab & Co. As Jenny mentioned before the break, some news regarding a new deal for Palantir, but not enough to boost the share price today. Jeff, what's going on?
Yeah, not enough to boost the stock, but I think it's enough to show investors that they're seeing more and more growth in that AI platform. Today, Palantir, which of course we know creates and handles the data and AI software for governments as well as individual corporations, and they unveiled a new AI-related deal with energy systems manufacturer Eaton. Palantir said it would provide Eaton with their artificial intelligence platform named AIP. Eaton and Palantir already have a relationship. They create an AI-supported workflow for Eaton's supply chain division. This will be an extension on that process to use AI to make decisions around the supply chain issues using their own data. Commentary out of Palantir, so the scope and reach of Eaton with operations in about 160 countries, along with their position in the energy transition, make them the ideal partner for Palantir. As far as the reaction day from investors, I mean, if we look at this company, we know this is where they have been focusing on, right? Kind of getting away from relying so much on the government business that they have. In fact, revenue on the U.S. commercial side has really started to stand out. In Q4, we saw it up 70% year over year. A lot of that coming from the U.S., where customer count increased by about 55%. Even though there was a slowdown in the most recent quarter, we still saw commercial revenue they're expecting to represent about 45% of growth going forward, with U.S. commercial revenue outlook at about $661 million for the year. So good news, not a lot of reaction, unfortunately, for investors out there that are watching the company.
After Palantir announced the new deal, its shares climbed to $21.68, and funnily enough, the US Army contract was awarded to the company on the heels of CNBC Mad Money host Jim Cramer suggesting Palantir stock does not qualify as a buy. In the lightning round segment of his show, Jim Cramer said on Tuesday, "It's very tough to understand what Palantir really does for the government. So therefore, I am no longer going to say that that's a stock to own." But as you may know, most people think that whatever Cramer says, the opposite happens. And yes, this is exactly what happened. Palantir got a contract the next day. You really can't make that up. But in addition to this $480 million contract, Palantir recently expanded its partnership with intelligent power management company Eaton. According to recent reports, the expansion will be to bring Palantir's artificial intelligence platform, or AIP, to Eaton's operations. This collaboration will support Eaton's efforts to modernize operations and accelerate innovation by automating data processing tasks. It also further expands Palantir's access to private data across industries. Partnerships with private enterprise create opportunities but also responsibilities for Palantir to ensure its technologies are applied responsibly for public benefit. Ross Shalom, Eaton's chief data officer, said that while many talk about the promise of generative AI, Eaton and Palantir are building something real in the heart of the company's operations. He also added that they view these AI-enabled applications as strategic differentiators that will greatly accelerate productivity and, more importantly, improve their ability to deliver value for their customers. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
They always say don't short a dull market. So that being said, I mean, we're looking at Palantir. That's the first name on your chart here. And 1 year, it's done well, but it really sort of was trading in somewhat of a range the first part, and then February moved higher, and then has been in a new range. Some of your thoughts about why this, where this could be headed, and why?
Yeah, so we talked about the AI trade. The hardware names have been the first leaders in it. The NVIDIAs of the world have just taken off and taken the world by storm. I think the next wave is going to be the software names. This is a name I've been following for a while. You know, it's had a fantastic year. If you look at a big picture, up from 16 and a quarter to start the year to over 20 where we are now. That's not too shabby. You know, that said, we were at a high of 27 plus. We've come off of that since then. So it's been challenging. It's been consolidating here, but I still think it's a fantastic long-term hold. You go back and look at last year, we were kind of in a channel, maybe 16 to 20, broke out of that channel, and now we've been consolidating after that first quarter earnings here above 20. I think that's fine for the long-term story of this stock. I'm happy as long as it's still above 20. I think this is a buying opportunity now that it's come back down to this lower end of the range.
Admittedly, the contract win alone may not necessarily move the needle for Palantir in terms of revenue and earnings. Still, this contract win may be a sign that Palantir's governmental segment is about to experience growth re-acceleration in a big way. We're not saying that the governmental segment growth, which came in at 16% last quarter, is going to catch up to commercial segment growth, which came in at 27% last quarter. However, after re-accelerating to 16% from 11% last quarter, growth for the defense unit may be on its way toward re-hitting annualized levels exceeding 20%. With governmental sales still making up a majority of Palantir's overall business, present and future success with the company's AIP for defense rollout could translate into a level of growth that may lead to results that handily beat current expectations. You can imagine what sort of impact this may have on the Palantir stock price. Palantir stock currently trades for around $21.68 per share, and ahead of Palantir's latest earnings release, investors almost bid it back up above $25 per share, but a mixed reaction to quarterly results knocked it down to current levels. Again, it's unclear how much the defense contract win news will provide a lift for Palantir stock. In fact, shares could tread water in the near term. However, this could change in the coming quarters. Subsequent earnings releases, combined with further AIP for defense developments, may help to spark the next major rally. Further success kicking the governmental segment back into growth high gear may increase confidence that Palantir will beat, not merely meet, expectations. The high end of sell-side financial forecasts for 2024 call for the company to report $2.8 billion in revenue and 37 cents in earnings per share. In other words, 25.9% revenue growth and a nearly fourfold jump in EPS. Greater than expected success this year could also boost confidence of a revenue and earnings topper in 2025. Hence, a clearer path to past highs may be emerging. A return to $30 or even $40 per share may be closer than you think. But what do you think about Palantir stock? Is it a buy now? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Palantir is. If you would like to know what companies like Palantir have been up to these past few days,